Hi dear traders, last trading week was shortened and most exchanges were closed because of the Catholic Good Friday. The volume of trading was quite low, however, all the published data was of great importance. It is obvious that we will see a reaction to these events only during the new trading week, as investors will come back to markets after long holidays. Thus, on Friday, the US disclosed its labor market data after some reports fueled concerns about an upcoming recession. Meanwhile, news about a rise in the number of employed people boosted speculations about a 25 basis point increase in the key interest rate in the next month. Notably, before the publication of the report, traders were sure that the Federal Reserve will take a pause in the cycle of monetary policy tightening. Thus, in March, the number of employed people added 236,000, whereas the unemployment rate dropped to 3.5%. Notably, wages showed a slow increase. Judging by these figures, the ADP report and the ISM business activity data, the US economy is suffering some difficulties at the moment. Traders of the euro remain cautious. As a result, the euro-dollar pair settled at the level of 1.09. Last week, the asset managed to reach a two-month high. Investors are sure that the European Central Bank will continue raising the key interest rate to combat high inflation, which has just started to slow down. What's more, Germany's industrial sector has manifested signs of recovery, which is also boosting the euro's investment attractiveness. The British pound is also hovering at its highs despite the fact that the measures aimed at capping inflation have not borne fruits yet. Officials of the Bank of England remain stuck to a hawkish stance. Thus, Andrew Bailey made it clear that the regulator would continue raising the benchmark rate, especially after an unexpected surge in inflation recorded in February. Nevertheless, the pair's growth is mainly driven by the weakness of the US dollar. The Japanese yen also benefited from a decline in the greenback. Last week it jumped by 0.85%. The growth was also spurred by a current account surplus in the Japanese export-oriented economy and a consumer confidence rise to a non-month high. Investors showed a positive reaction to the news, ignoring an ultra-loose approach to the monetary policy chosen by the Bank of Japan. Meanwhile, in the given period, gold managed to consolidate above $2,000 per troy ounce. Demand for the precious metal surged just after the Reserve Bank of Australia took a pause in monetary policy tightening. Notably, all other large central banks intend to continue combating inflation. Gold is too sensitive to future changes in key rates. The fact is that lower rates reduce income from the precious metal. Last week, gold added more than 2%. What's more, investors do not believe that the policies of the global central banks will remain hawkish. At the same time, oil remains stable near $85 per barrel. During the previous week, the asset was trading sideways. Signs of a possible recession in the US are offsetting lower supply in the energy market. Notably, the OPEC countries unexpectedly announced their intention to cut oil production by 1,160,000 barrels per day from May this year. These are the trends of the last trading week, and now a new week and new portion of macro events are ahead. Do not miss our daily news reports to be always in touch with the latest events. See you!